Tether is a big part of this ecosystem, and the real use case for Tether is for global arbitrage. So what you'll see happen is when Bitcoin falls quite a bit, falls 10 or 20% in a day, you'll see the exchanges, the prices get disconnected. And then what will happen is people will use Tether to buy Bitcoin at a lower price than on exchange, perhaps like Bitfinex or someplace in Hong Kong or Japan, and then they'll bring it over here and sell it in the US, and it's a simple exchange arbitrage. So that's the mechanics of what are going on.
Meaning you can get it for cheaper in Asia.
I mean, in Asia, you can buy it 2 or 3% cheaper. Sometimes on big wild days, they can be a 10% spread. And so that's really...
How much of the market is that, is there a huge arbitrage community right now?
There's a big...
Yes. And do they have to be physically based in Asia and then have a partner effectively in the United States to make this work?
Most of the people that are doing the arbitrage have offices throughout the world, so physically based in Asia. Some of the arbitrage is because there's friction, there's structural frictions. For example, Korea, very difficult to get money out of the country. So at times, Korea has traded at a 30% spread to the rest of the world. But that's because once you get the money into Korea, you can't get it out. So,
right.
But if you have a Korean partner and you have a Korean banking relationship, then you can do that.
So what is the, dare I say, intrinsic value of Bitcoin now?
The intrinsic value, well, the way I measure it is number of transactions, and I do a kind of a simple regression with number of transactions and velocity, and you get an intrinsic value somewhere in the 8,000s or so. So we're at 9,500 today.
Still a little high.
15, yeah, and the way I use that is...
Are you shorting Bitcoin then?
No.
You're not?
No, absolutely not. No. This is such a young technology that to short it to me makes absolutely no sense in terms of the risk reward. Okay, because this thing can move 20, 30% in a day. So, the most I'm going to make is 100% on my downside, right? And the worst is I'm going to lose 30% in a day. And you compound that, and it's just not a great risk reward at all.
Is there any new other currency that we always talk about Bitcoin, but then people talk about Zcash, they talk about Ripple, they talk about Tether, all of these things.
Yeah, I mean Tether is really just the U.S. dollar. That's really what it is. It doesn't move. I mean, it'll move within a 0.5% or so of $1. You want to look at some of the platform companies. Okay, so Ethereum or platform
Ethereum
currency.
Classic.
Ethereum Classic. You want to look at EOS. You want to look at a new one coming out called Cosmos. There's a lot of these
Tell us, why would we want to look at Cosmos over Ethereum, for example?
So Cosmos has what's called the inter-blockchain protocol. So remember when you had an AOL email, and then you had a Yahoo email, and you couldn't send them to each other? That's where we are in the blockchain space right now. What Cosmos does is now I can send my AOL to my Yahoo email and connects everything. And so that's the missing link in this space at this point in time.
Is there a limited number of these things?
Yes. There's a limit. And all of these,
Who is the Federal Reserve of Cosmos?
Well, there is that's the whole thing. There is no centralized figure.
I know, but there's some kind of centralized something that's built into the technology so that there's a limited number of these things.
Exactly, and that's what the software is. That's what the software does.
But people can, quote unquote, fork these things,
Of course they can.
Which effectively becomes...
I don't understand, right?
Well,
if you can just create more of any of it, doesn't that drive down the potential value, especially when you don't know how it gets taken out, how it gets driven?
Right, but not any more than if the Venezuela currency is devalued, does the U.S. dollar.